Welcome to today's market report. European stock markets are seen largely rebounding Tuesday after the previous session's sharp losses. However, the overall tone remains weak amid concerns that region's recovery will be stymied by fresh lockdowns. DAX future this morning traded 0.2% lower, CAC 40 climbed 0.6%, FTSE 100 contract in the UK rose 0.6%. European stocks sold off sharply yesterday with these three benchmark cash indexes all dropping over 3%. A fresh COVID-19 outbreak in Europe is increasing fears of more new lockdowns on the continent, with the UK due to announce new restrictions on bars and restaurants later today. On Monday, the UK government's chief scientist advisor Patrick Vallance warned that the rate of infections could reach around 50,000 a day by mid-October without curbs. A number of European countries, including France, Spain and Greece, have already implemented new restrictive measures, with Germany's health minister said the trend of cases is worrying. The economic data slate is largely empty in Europe today. Instead, investors are likely to concentrate on US Fed Chair Jerome Powell as he makes the first of three appearances on Capitol Hill this week to discuss the central bank's response to the coronavirus pandemic. In corporate news, banks will remain in focus after Monday's substantial losses on the back of a report alleging that several continued to profit from transactions with suspicious entities despite flagging up concerns to the authorities. LVMH may also be in the spotlight after a US court set a January date for Tiffany's lawsuit against the French luxury goods conglomerate for trying to back out of its $16 billion deal to acquire the jeweler. Oil prices drifted on Tuesday, continuing the previous session's weakness despite tropical storm Beta providing less disruptive to the infrastructure in the Gulf of Mexico than feared. However, persistent worries about fuel demand as coronavirus cases continue to flare up around the globe remain a drag. Crude future traded 0.1% lower at $39.51 per barrel. Brent contract fell 0.1% to $41.41 per barrel. Both oil benchmarks fell around 4% on Monday. Gold futures rose 0.4% to $1,917.95 per ounce. On the FX front, GBP/USD looks to be back under pressure as the market is seeing dollar strength across the board. The pair is trading near to the 127.80 daily low, and a loss of the 126.90 support is set to trigger a deeper fall to the 122.50 level, according to Commerzbank. GBP/USD's bounce from the 200-day MA at 127.24 appears to be over, and while capped by the 20-day moving average at 130.70, a negative bias is maintained. Loss of the 126.90 Fibonacci support should be enough to trigger a slide to 124.45 and then 122.50. British Cabinet Minister Michael Gove was out with some comments just now, saying that new restrictions will be imposed in the UK and the PM will spell out further details. We are taking these steps reluctantly. If it is possible, people should really work from home. These remarks kept the GBP on the defensive and will not help GBP/USD pair to surpass the 128 mark in the short term. Euro-dollar risks a further pullback to the 116.95 level in the next weeks. The sudden sharp decline in euro that sent it plummeting to a low of 117.30 came as a surprise. While the rapid decline appears to be overdone, there is no sign of stabilization just yet. From here, there is a scope to Europe to dip towards 117.20 first before the current weakness should stabilize. Resistance is at 117.90 followed by 118.50. The dollar edged higher this morning, holding on to overnight gains as traders value its safe haven status while equity markets slump amid renewed virus concerns. Dollar index was up 0.1% at 93.727, climbing to a 6-week high. This is today's market news. Thanks for listening. We'll see you next time.